What's going on, everybody? This is Lucci here with the first episode of a new series we're calling Wall Street Washout. Now, this series is going to showcase my losing trades, and as you guys know, I got a lot of losing trades, so I can't show you all the good shit. I got to show you some bad shit too. So let's go ahead and get right into it. Today's loser was BIDU. Right down here, we're looking at a year chart of the performance in BIDU. As you can see, the stock's been on a clear uptrend. A lot of these tech stocks look the same. At 110, had trouble at 110, broke down in mid-December. So let's go ahead and zoom in here. Again, had trouble at 110, broke down, and you figure once he broke down, he's ready to go. You know, he's ready to go down. But he stalled out at $100, and in the last couple days has made a substantial move higher. What were we thinking long? This is a chart. This is a 10-day chart now. Okay, so you see the 100 level, broke the 100 level, ripped up to 105, consolidated a little bit, and now usually what will happen on these moves in these tech stocks or any big rally or any kind of trend rally, they'll consolidate, make a big push higher to get all these, to get everybody in, just like myself. And all of us are thinking, okay, this move has started, he's going to 110, he's going to go to 114, he's going to make new all-time highs, and then just screw him the next day. So that's basically what happened to us. So this is a chart of the 2-day action. We got in Friday night, and the reason why we got in was we figured, okay, the 105 level, he ripped higher at about 2 o'clock, almost up to 107. So we're watching him here, we're watching him here. We started to piece in here, piece in a little bit. See this huge pullback, we bought a little bit more here, here, here. And then, you know, we waited this thing to close above 107, and we figured we're good for a hold overnight. You know, you get a big, strong push at the close. You know, you figured you're good for a gap up. And, of course, we got faked out. This move here was put in to basically screw us. So the next day, as you can see, gapped much lower. Made an attempt to get back up there, but ended up coming back down to 105. Again, making a good comeback at the end of the day. We got out here assuming that we got totally faked out and that this move was not going to happen. It's still possible that this thing will go higher, but again, we took our loss, we took it off the table, assuming that we got faked out. Let's take a look at the option now. Up here is a 5-day action of the 110 call. Now this is the call that we choose to play this. Now the reason why we chose this call, again, if you go back on this chart, the reason why we chose this call was, you know, he basically had trouble at 110. This was basically the breakdown, and you know, you figure he's going to push lower. If he can't do that, he's going to come back and make new highs. At least this is what I had on my mind. So I figured I'd get the 110 January call. If I could get a piece of that move higher to new 52-week highs, you know, the 110 call would probably be pretty active. Alright, so let's take a look back at this option up here. Again, this is the 110 call. This is 5-day action. This was the beginning of Friday, and we got in towards the end of the day. Here was the 2 o'clock rip. Again, if you look back on this chart here below, around 130 to 230, he put in that big rip higher to 107. If you go back and look at the option, during that time, the option went up to like $1.25 in that kind of range. We started building our position right here, and he made that last stab at the end of the day. If you take a look at the chart again below, he made that last stab at the end of the day. We figured, okay, had to push higher, pulled back, buyer step back in and push this thing back up to 107. We were going to get that move higher to 110. So we figured, okay, pile in. We're in with about 40K. So we had about, I believe it was about 300 contracts. We'll look at that in a second, though. So again, he closed, option closed at $1.52. So we were up, you know, a little bit of change on it. We figured, okay, you know, this guy closed high. Buyers closed him high. You know, we're going to get that follow through. We'll probably sell at $2. You know, $3 if it breaks 110. Obviously, that didn't happen. We got faked out. Let's take a look at the intraday action. Right off the open, I mean, he closed a point lower, so that killed our option premium anyway. Pushed down a little bit and then made this huge stab higher. I did want to make one point in that you do got to minimize your losses. We had the full position by the time he got back up here, and our option was, you know, basically we could have taken the loss for a 6,000 loss as opposed to a $15,000 loss. That's a big difference there, you know. Again, that comes in with the intuition and what to do with your loss. Do you hang on to it? Because at that point, you know, none of this stuff happened yet. So we're still thinking, okay, he pushed back higher to 107. You know, maybe this guy's still in play. Maybe we still got a chance. You know, but the more times you kind of dick around with that and have that in the back of your head, you know, the less chances you have of really minimizing your loss. Okay, obviously this guy has no intentions of pushing to 110 today. So again, we should have taken our loss up here, but we didn't. We probably sold some here, and then sold some down here. So we ended up taking about a $15,000 loser. Let me go ahead and show you the buys and sells, and then exactly what our average cost was. Right here is a quick Excel spreadsheet of all my buys and sells. Here is the weighted average here of the buy and the weighted average here of the sells. So you can see we bought all our contracts at an average cost of $1.35 and sold them at about 94 cents. So, okay, so 275 contracts times an average price of $1.35. Let's do some quick math. That equals about $37,125. Now you take those two same 275 contracts, and we'll figure out what we sold them for. And I believe it was, what was it, 94 cents, guys? 95. All right, fine. We'll say 95 cents. And that equals $26,125. So you get a net loss of 37,125 minus 26,125, and that equals $11,000. 11,000. So that's how much we lost on that trade. We put in this, and we sold for this, and lost 11,000. Now remember, I said 15,000 because we were up 4,000 on this yesterday, so we lost that. So the net loss was only 11,000, but I said 15 because we were actually up on the position 4 grand. So take that in consideration, and you got 15 grand. Again, shitty day for Lucci, shitty day for BIDU. Is that trade still on? It still could be. We're still going to go ahead and keep an eye on it. So again, if he breaks 107, we may go ahead and take another stab at that. We should have minimized the loss at 6,000. Remember, 6,000 is better than 11,000. So this has been the first episode of Wall Street Washout. Leave your comments below. Let me know what you think. Obviously, I'm going to go ahead and show you a lot more losses as well as we go along. You guys know I take a bunch of losers, I take a bunch of winners. Let me know what you're thinking out there.